morning, everybody. It's Friday, February 2nd, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to that during the show. Quickly here, overnight markets had March corn unchanged at 447 and a quarter. March soybeans were down a penny and a quarter at 1202, and March Chicago wheat was up 5 at 606 and a half. We had some jobs data out this morning. Unemployment came back better than expected at 3.7%. They were looking for just a slightly higher number at 3.8, so that was better than expected. And overall jobs came back sharply higher than the expectations. They were looking for around 185,000, came back at 353,000. Yesterday was the first settlement for February crop insurance. We settled yesterday at 479 for corn, and beans were 1185 and a half. Not a lot in the way of fresh news here this morning, fellas. I noticed overnight another private estimate came out. StoneX lowered their Brazilian bean estimate down to 150.4. That would have been about 1.6 lower than what they were looking for in January, and 4.8% lower than last year. We were talking just a minute ago. It seems like it is, it's a race to continue to lower estimates over there based on weather, but USDA and CONAB have been slower to grasp onto that. So guess I'll throw it over to the crew. We've, like I said, not a lot of fresh news here this morning, but that's kind of what we got. Dust, you got any thoughts?
Yeah, no thoughts really. I mean, I would just point out that yesterday's move was led by beans, which makes sense from the poor sales. But we also saw wheat trade higher at the end of the day. You go back to the prior day, wheat was down 10 cents and beans were up on the day. So there is still some major spread function happening by probably managed money that we need to take into account. Like your day-to-day moves are certainly going to be predicated on the whims of the largest players, which right now the funds are holding a very, very short corn position. They're building a short bean position and the products as well. They've really been selling off on those. And, some of the technical things we've talked about in the last couple of meetings and reports were that we've had some reversals. Those are still intact for now. If we go take those out, that would certainly be a concern to see some stop selling. But for right now, I don't think there's a whole lot of news to go on today, not much change. We're going to probably have to wait to see where commitment of traders come in tonight, or this afternoon rather, and then what weather changes we see over the weekend for Argentina in particular.
Yeah, you bring up a great point. What I was looking at, I mean, you look through a number of different weather services that obviously we use and that are out there in the industry, but it still appears that the back half of this warming trend that Argentina has seen, they're going to get water, and it's going to be preserved precip, obviously, which is, always the key. But if they get that water, we might have skated through sort of a critical period where, we're not going to argue that they didn't get heat, but if you get water on the back end, we could have taken out a disaster type of scenario. Would you guys agree with that?
Yeah, and let me just put some stats out there to follow up on that. So in the 1 to 7 day Euro model, we're projecting 50%. This is actually crop profit weather. 50% of normal rainfall for Argentine corn, and that's a production weighted number. And that's probably a pretty good number given the size of that production area. And 44% for beans, and that's the 1 to 7 day. And we're also talking hot temps. We're talking 10.8 degrees average temp above normal.
Yeah, so that's supposed to be clear. To be clear, Dust, that's supposed to be the dry period, right?
Yeah, 1 to 7 day, like you said. In the back half of things, we get to the 8 to 14 day. Now we flip to 150% of normal rainfall projected today, with average temps going back down to only 2 degrees above normal. So that's in the 8 to 14 day, which again, it's a confidence report. That confidence can still shift over the weekend. So that's why I'm saying we go back and we affirm that over the weekend, that period of time, specifically talking about the Feb 9th through Feb 15th timeframe. If that period of time is still showing this rain coming in, then the markets can breathe a sigh of relief that they did yesterday. If that has changed again, if the models flip again, then now we're talking about the time of year where it still is mattering going into harvest. That we are projecting some yield loss from this week alone. If this extends, I think the market will respond.
Yeah, that's good points. What's your take on the last couple of closes? Yesterday, obviously, beans had a pretty close. You know what? We'll hold that thought for just a second. Dan brings up a good point here. Are those Argentina temperature departures in Celsius or Fahrenheit? I believe it's Fahrenheit, correct?
Fahrenheit, yeah, it's definitely in Fahrenheit. Yeah, good question. I should have said that. For those that are watching and not familiar, we contract with Crop Profit, and then we built it into our program as well. So we're very sensitive to, we use that for a lot of our data. And in this case, they're putting it out in Fahrenheit. So good question, Dan.
Yeah, thanks, Dan. Good to hear from you here this morning. What I was alluding to there, Dustin, yesterday, or Jason too. I'll throw it to you and Brian, throw the room around bit here, but poor close yesterday for beans. We attributed that to a number of different factors. Obviously, really poor export sales there, but to see corn have, I would argue, the second day of a strong close, and to see the disconnect there, I think a little bit in, buying corn, selling beans with what we know on the acreage piece. Anything to take away there? It's still early, but
not outside of chart formation, right?
Okay.
It's acting well. I'm guessing it's just some profit taking. Funds tend to sell when it continues to go down, and so if that's kind of seems like it's starting to has started to slow or isn't working, maybe they start buying it a little bit, and that can kind of fluctuate back and forth. That might last for a few days here and there, but just looking at a chart, it feels like we're trying, tooth and nail to carve out a bottom is the best way I could put it. Beans are kind of chopping around. Really meal oil have been making the move the last 4 or 5 days. Meal's been strong and oil weak. So meal seems to be picking up premium because of this Argentina weather forecast.
Saw really good sales there too.
Yeah, right. And so they're again today, right? Meal's up, oil's down. So keep an eye on that one if you want to kind of get a feel of what the market's thinking as far as the, Argentina problem. Outside of that, not a lot of opinion. Obviously, we're trending lower. We're staying in some sort of trend channel on the way down. If we can carve out a bottom, we get a little bit of a rebound. Moving averages are quite a bit away from where we would see resistance, even if this bear market continues, right? A bear market bounce would be a decent rally in corn and beans. So,
yeah, and yesterday we had that USDA crush report, and they had oil stocks up sharply from the expectation, and they had crushed down 2 million bushels from the expectation. So that was a big blow to oil share because not only did we crush less than we expected, we ended up having more oil on hand than we expected from the USDA numbers, at least. NOPA wasn't necessarily supporting that same number. But oil share has dropped down to the lowest. It's back down to 38.3%, which is the lowest since basically the beginning of the year. And another thing to think about too, talking about funds, trying to follow new lows, right? Like they're reinforced with the position, on a kind of a snowballing market. And I think we've talked about the levered markets and how margin calls weigh on market participants that have been long. There's been a really good story to try to be long. And then that story just kind of beat everybody up that was long because it flipped to a wetter forecast for Brazil and the funds piled in the shorts. So it's been a very hard trade to be in, obviously. And any margin calls that have been associated to that have probably facilitated new lows because the very people long make those lows as they exit the position. And one of the things John had mentioned the other day, he's not on today, but we had not been below the 20-day moving average since Thanksgiving on the March contract for beans. And so that's one thing that can start to change for the funds and how they, what to Jason's point of where if it's kind of done going down or they're starting to see some closes above some major moving averages like the 20-day, that might give them a little bit of a pause or change of heart after a really good position that they've worked into. And that number comes in today right at 1224. So something to keep in mind is eventually we're going to meet that 20-day moving average, whether it's through the average itself coming down or the price coming back up. And it's whether or not we're able to close above there and then see what happens the next couple of days after that. It's not always a given that the funds will capitulate and get out, but that's probably our best chance to see it, is we need to actually start seeing some technical closes.
Yeah, and two, as we, they'll reevaluate their opinion too, won't they, as we get closer to March 31st and what their overall writing opinion is on the acreage story and weather. Wanted to touch briefly on that. I looked at updated drought monitor information here this morning, and less than 30% of the corn and bean acres right now are experiencing drought, according to the monitor. So we've cleaned up a lot of, the overriding drought issues that we were talking about for first part of the winter. Those systems we got that moved through obviously the northern part of the Corn Belt, but also through the central part. And I know you've talked about it a number of times there, Dustin, the recharge and some of that soil through the plains, could entice some guys to take a shot at maybe planting a little bit more corn or Milo or something to that effect.
Yeah, I can just hear a lot of people right now say, well, how much of that is actually absorbed? I can hear people saying that probably. So I think there's still going to be people that don't feel that there's been a huge recharge necessarily from the winter, but we try not to put too much stock in long-term droughts anyway, right? If we're going into the fall with a fairly dry pattern like we had in Iowa this year, right? Is that indicative of a bull market that we're projecting the next year? It could be. I don't think the data suggests that that's a very good measure, though, to pre-predict that the next summer is going to be dry as well. We had the same thing in 2012, and we had a really good recharge by the time we got to 13. And everyone was just, they came off of a really bullish 12-year. Mississippi levels were very low, end of 2012. And all of a sudden, November, December, we got a ton of moisture came in. And then we all know what happened in 13. We got into a pretty big bear market from a good year. So
sure.
Just another reminder of like long-term droughts are not indicative of a good.
Dustin, have you been tracking the water levels on the Mississippi? I'm guessing all the river levels have been trending up quite a bit.
Sharp improvement. Yeah.
It's close to flooding levels, I think.
Is there some areas now that are actually going the other way? Flooding
I
levels?
think so. Yeah.
Jace, is funny. So, I make my way to Central Illinois quite a bit, as most people would know, and some of the ice jamming that they got up in that area, they had a really big problem once that thaw came through and started jamming it up. So
sure,
yeah, it was some of the pictures were gnarly. You get that stuff over the roads and up in the bridges. It's pretty hairy.
Well, we were at we were record lows Mississippi in the fall, right? -10, -11, 12. Right now we're at +20, we're projected to be +24 by Feb 7th. So,
wow. So you're talking about like a 4 to 5, even 6 week flip in terms of just you get the right systems and clean it up pretty good.
So that should help our competitive advantage, right? If moving grain, if somebody wants it down the river system, which is good, I guess.
Yeah, that's partly maybe why the March-May spread has narrowed, Jason, right? It's because the river levels have improved so much. We have seen an uptick in sales to Asian countries like Japan, South Korea showed up quite a bit here in this last weekly report. Mexico as well, of course. But we still have this basis only question out there and low prices, and there's been a lot of grain that's been stalled and hasn't moved that will probably move in the JFM timeframe. And so I still think that as you get to end of Feb, we're going to get a true look at whether or not what we saw in the September and December contract for widening spreads is indicative of the excess supply that we're expecting that's unsold. So I think it's more of a spread thing at this type of a flat price. It's a spread thing more than a flat price thing, in my opinion.
Yeah, well, and I would think that would give the funds that are short a lot of corn kind of confidence to stay short if the spreads do widen and they can roll and they can make that carry essentially and stay short corn. So I think it's a big deal to watch how these spreads act going into first notice day. And if they don't widen, that would signal to me, if I was a fund short corn, that maybe it's time to start looking for something else to trade.
Oh, it's really good stuff, guys. So we've had we're coming into the open here. We've had some folks reach out. Obviously the markets have been tough, and we're cognizant of that as anybody. But we got Brian Williams is the thought of the day to put a bow on the weekend. So, Brian, what do you got for us? So this has not been practiced or scrubbed. So bear with me here. We got the red button if things go wrong here.
Yeah, if I go off the rails. But no, a little Friday fun fact for everybody here to lighten up the mood going into the weekend. Heading into crawfish season. And it's a big component to the Louisiana income. I heard it brings in about 300 million to Louisiana's income. So they experienced a drought last summer. And with high demand, your typical pound of boiled crawfish, we usually go for about $9 a pound, is skyrocketing to close to $17 a pound.
Ooh.
So
we got a bull crawfish market.
Bull crawfish market. So, anyone heading to Louisiana, New Orleans for Mardi Gras coming up here in 2 weeks, you might want to put a couple extra bucks in the pocket here if you're looking for that shrimp po' boy, or you might just want to go to the beignet and hurricane route and just keep it a little bit lighter. So thought that might be interesting for everyone to hear that. So I thought that was kind of a neat little fact out there for Friday.
That's good stuff, Brian. I think we may have to continue this. You passed the test. I've never been more nervous than
right.
The segment started. But.
Keeping it on the route. Yep, we're all good.
So bullish crawfish, got it.
Yeah,
right.
Yeah.
Oh, that works. Just came into the open here. March corn is up a half, 447 3/4. March soybeans are unchanged, 1203 1/4, and March Chicago wheat's up 7 3/4 at 609. One thing I want to point out here: next Tuesday, February 6th, as we've been talking about, we're going to have another exclusive content for AgYield consulting clients. Dustin and the team, we're going to visit on ARC and PLC decisions that need to be made and how that revolves around, some other marketing decisions that you'll be looking at. Pre-registration is required for that event. I know we've sent out a link for our clients to log in and register. If you need any help, give us a call and we can walk you through that. And as always, streaming live on X, Facebook Live, and YouTube Live every day that the markets are open, 8:15 Central Standard Time. This will wrap it up for the week here, guys. Thanks for a great week. Good conversation here today. And look forward to talking to everybody Monday. Have a great weekend.
Yep. Thanks, guys.